Hi everyone. Hope everyone is doing good. So today I wanted to talk about very shortly about this particular topic that has been going on in my mind for a while. So this is something which recently I observed. It has increased a lot among youngsters. So that's why I wanted to talk about it actually. So recent times, right? Uh, if you have seen in FMs or social media or be it TV, there has been a lot of ads related to investment in mutual funds, like promoting investment in stock market, mutual funds, etc. So mostly these are driven by these third party brokerage apps. Basically, if you see, there has been a vast increase in the number of these brokerage apps. If you see, in the last couple of years, a lot of these brokerage apps have cropped up that makes life easier for you to invest in these stock market, mutual funds, gold ETFs, bonds, etc., etc. So they satisfy varied needs. Mostly they promote mutual funds, stock market, etc. So what has happened uh, as a result of all these promotions is uh, there has been an increase in the number of people investing in shares and stock market these days, especially the youngsters. So immediately after they join a job or start earning, youngsters these days are like investing, started investing in mutual funds. Most of their savings goes into mutual funds, etc., stock market or mutual funds. So because if you see, a lot of not only I'm talking about the ads, but a lot of influencers. If you open Instagram, you can see n number of influencers talking about it, showing that they have made so many profits. So like polish, giving a great shining fancy polish to the stock market, mutual funds, etc. So see, I totally agree. Stock market and mutual funds, of course, gives you excellent returns. But what I wanted to talk today about is most of them show only the bright side of it. So a coin always has two sides, right? Uh, so most of these influencers, they end up showing only the bright side, the positive side. So just either to promote the brokerage apps. So we don't know what is the hidden agenda of them. So or just to show that they are making good money from that. So maybe that perspective could be there as well. But at the end of the day, the bottom line is all of them end up showing the positive side of the stock market, mutual funds, etc., etc. My video today is mainly for the youngsters who just started earning, say freshers who are just out of college, just got into the job. So there has been social media posts, there has been uh, people whom I have spoken to, who have told most of the youngsters these days see stock market as a platform to earn good money. Okay, so say if I put 100 rupees, I can earn 200 rupees tomorrow. So that's the way they see stock market today. Okay, so because of all these promotions, uh, most of these people are driven towards it or attracted towards stock market and mutual funds. So I just wanted to give my perspective of the other side of the coin. So that is the risk side of investing in stock market and mutual funds, so that the youngsters, they can go back, do their homework, take this as a suggestion or an information, do your analysis, and then you decide how to proceed. So probably I'll be giving my perspective on the risk side of it, and probably how you could start investing in stock market to start with. So probably I can guide you on that. The youngsters, you can then go and analyze yourself, because you are the best judge for you. So you have to analyze, you have to, lot of information is available, so you have to just go back, analyze things, and decide how to approach your investment in stock market. So first and foremost, uh, basic thing is, everyone knows this, so your investment is always at risk. So that is the principal amount you put, the capital amount you put, right? Say you are investing 10,000 rupees, so you never know the 10,000 rupees you will get back when you need. Okay, so that you can underline that, when you need, because need arises anytime. Okay, so there is no guarantee. So there are three scenarios possible. Either you may end up retrieving the same amount around, or like near amount when you need. 10,000 means probably 9,500 or 10,500 you may end up retrieving when you need. Second scenario is, if your time is bad, the market is not looking good, then probably your 10,000 rupees would have become 7,000 rupees. So say some emergency is there, you want to retrieve that amount. So at that point of time, you may not be able to retrieve 10,000, because now your 10,000 has become 7,000 because of market fluctuations. So only that amount will be available for you. Or the good side of it, the positive side of it, your 10,000 would have become 12,000, 14,000 also. So depending on the market fluctuation, if the market is good, you will be having the better outcome. So the point here to note is, any of these three things are possible. Okay, so our mind will say or think about positive outcome only, which is good, but we should always also think about the negative side of it. So what if the market goes down, you cannot pick your entire investment. So at that point, it's a loss for you. You are ending up in a loss. See, 10,000 is a small value, I told. So there are people who invest in lakhs. There are people who invest in more than 10 lakhs. So there are people like that. So for them, you imagine the amount would be very high. So you should always remember this thing, that the principal amount is always in risk in stock market. And the best example or the best time to witness this is the current Nifty 50 or Sensex. If you go and see the last couple of months, it has completely plunged down historically. So if you see, like stocks like Tata Motors, which are very sought after stocks actually, so which has good fundamentals, etc. But if you see the last couple of months, it has gone down by 50%. So if you have invested 10,000 3 months before, now your 10,000 would have become 5,000. So imagine 10 lakhs means 5 lakhs. So you will be at 5 lakhs loss. So that's how the stock market works. Same applies for mutual funds also. So probably because of the variation in the stocks, so because of they invest in multiple stocks, multiple flavor will be there in mutual funds, due to which you will have a lesser risk, but the risk is always there. So here, if you are in 5 lakhs loss, there will be around 3 lakhs loss. So that will be the only difference. But given the current market scenario, most of the stocks are down. So then you can imagine, even mutual funds, probably people would be in the same similar situation. So that's what you got to remember always. So the risk of losing your capital is prominent. So the thing is, if you don't have the need of that money, then you are good. You can wait till the market rises. You don't know when it will rise. Okay, so that may take months, that may take years, but if you don't have the need of that money that you have invested, then you are in a good shape. So these are the things you got to analyze. So the best approach for youngsters, the people who just started earning, right? So for them, the first approach is to make a small budget kind of a, put your expenses in a note down in a piece of paper, put a small budget, and everyone will have different needs. Some people have to pay rent, some people have to pay EMI, so a lot of things, it varies for people. So put everything and allocate some money in savings for your emergency needs. So always like 10%, 20%, have it as an emergency need in your savings account. After that, after putting all these things, whatever the surplus amount that you have, that is you can freely spend, that you don't bother, like that is the surplus. After fulfilling all your needs, whatever you are left with is the surplus amount. So that is the amount you got to invest in stock market. The simple reason being, you have already noted your expenses, you have already allocated funds for it. Now whatever you are left with surplus is something which, even if you don't get it back, or even if you are going to lose it, you are not going to worry, because already you are satisfied your needs, you allocated funds for it. So that is the concept. So this is the most risk-free way of investing in stock market. So it doesn't mean that you will have very negligible amount to start with. That is the right way. You start with smaller amounts so that you get your hands dirty, see how the market works, how the fluctuations are happening, and it will take some time for everyone to get used to it, to know when to invest, to know when to exit from your positions. So all these things you need to learn by using smaller amounts only, because even if you are going to lose, you are not going to lose much, you are not going to be bothered. So that is the right way. Anything for that matter, it will get time to get used to. So slowly you have to ingest things. Actually, you will understand various scenarios. You will see different scenarios every day. So, but you got to spend some time and see how the market works. So once you get a little bit hold of it, a grip of it, and your analysis becomes correct, you are able to predict things correctly. So that is when you got to start increasing your investment amount. That too, after doing all your risk analysis. So tomorrow your salary is not going to be the same. So as and when you do all these things, learning and all, your salary from your professional in your professional work, you may get promotion, you may get good hikes. So at that point of time, your salary may increase by a significant margin. So on that front, you can go and increase your investments. Slowly you can increase. So it's not like say Tata Motors, I'll pick that example. You have to buy minimum 100 shares. Not like that. Today you buy 5 shares. After 6 months you buy another 5 shares. Like that, whenever you get the surplus money, in that surplus funds, as and when you get more and more money, you go and invest. Okay, so that is the best way to do it, because lot of people are driven by greed. So even though they have a very good mindset, very strong mindset, neutral mindset, when they get into it, start seeing some money, start seeing some profits, immediately their greed to make more increases. It's same like gambling. So my humble request or suggestion to everyone is, don't be driven by greed here, because there are two sides of the coin always. you should always think about loss as well. Probably what I would say is you always think about loss first. Okay, better to think about the loss. So you are putting 10,000, just think what if I lose this 10,000. Okay, so what are my chances of losing this? Because winning is a win. Okay, so you anyway you're going to get, winning means what? You're going to gain profits. So at that point anyway you're going to get your investment back. So we don't have to think much about it, but you have to think about loss deeply, because you have to see, okay, if I lose this money, am I okay? So what I'm going to do next? So what are my risks of losing money? So you do the proper analysis. If you are not confident, don't go forward. So, or you do small investments, that is better. So you can, I'm talking about stock market, mutual funds, etc. Any, for that matter, any investment which has the risk of losing the capital. So all these investments commonly I'm talking about. So especially I wanted to talk about this for youngsters, because I heard, like, when I talk in my circles, lot of these youngsters going and investing most of their savings into stock market and mutual funds in an assumption they can double their money investment. So it's not like that, guys. It's not how it works. And it may work 1 or 2 times, but it may go reverse also, the other side also. It may go down by two times, 3 times. So for that also you have to be prepared. So that's the reason I'm making this video. So a small disclaimer here. So I am not a I won't call myself stock market expert, investment expert, etc. So in fact I am also new to these things. Recently only I got the exposure. But as you know, if you have seen my previous videos, we always talk based on the basic assessment of things, the fundamentals, along with common sense and some logical sense. So that's what the catalyst for all our conversations has been. So there could be some misses or some misinterpretations. So you go back, take this as a perspective, just do the risk analysis well. So whatever I have given is a perspective of things. This is my perspective. You can go weigh this thing along with your analysis, whatever you have done. And if at all it helps, if at all you see that whatever I am talking about makes sense, and genuinely after your analysis, so definitely you be a careful investor. So thank me later for it. Put the comments there so that I will know. So be careful, guys. So it's not something to play around. It's a hard-earned money. So be careful. Don't go by these influencers who boast about I earn so much profits. So today you invest in this. So there are many people who are like motivating in a wrong way. So they don't know anything about stock market, but they come up and tell you invest here, you invest there. So don't fall for all these traps. You are your best judge. So take some time to learn things, how to analyze the companies, how to analyze the fundamentals. So you learn, do by yourself. You are your best judge. So you don't have to rely on anyone, rely on any videos. So even I am talking about it through a video only, but you can take this as a perspective. So I'm not telling to follow whatever I'm telling, but a lot of people are misleading in social media and other channels. So don't fall trap to them. So be careful. Hard-earned money. So go with a risk-free investment. That is always better for long term. Thank you. Bye.